Hello, I'm Rich Sampson, editor of Digital CT Magazine, and welcome to another video introduction in part of our Innovative Leadership edition of Digital CT Magazine. I'm here today with Dale Marsico, Executive Director of the Community Transportation Association, and he's here to talk a little bit about innovative financing in the context of local share for transit. Dale's worked a lot on these issues recently and has some innovative and interesting approaches to share with you. Dale?
Thanks, Rich. The one thing I did want to talk about most of all is one of the things that we hear most from people around the country is they have a hard time raising non-federal share or local match for grants under 5310 and 5311. Oftentimes we'll hear that people say, gosh, I couldn't get the new vehicles I needed because I didn't have the local share. We have a way of helping with that at the association through our lending services, which we call CDTLS. And what CDTLS has done with a number of 5311 providers and 5310 providers is to provide that local share through a loan that allows an applicant to pay us back over 3 or 5 years, but having enough upfront money when they need it to get their federal grant. For instance, if you had a grant and you wanted to buy a bus and you needed $15,000 of cash for match and didn't have it, you could come to us and we could say, well, that bus is going to last for 3 years. We're going to give you that money for 3 years at 4% interest or less and let you pay it back to us over 3 years. You'll get the equipment you want when you need it, and you'll get the equipment that you need to help you reduce your operating cost. And we're here to help not just with those kind of matching situations, but if you're interested in other hardware or even software where you need matching funds now and can raise it over a couple years, we're here to help. So I hope you'll consider that and talk to us about it. We can be reached through our website at www.ctaa.org. And our money is available to help you get the kind of working outcomes you need to make your system better.
Now, Dale, another issue that we're hearing a lot about is reimbursement and how transit agencies can go this 30, 60, or even 90 days that it takes to get reimbursed by Medicaid or AOAs or the Affordable Care Act provisions when they come in effect over the next few months and years. Can you tell us a little bit about what systems can do to get through that initial period?
Well, I think we've had this, as you said, Rich, as a significant issue for many people for many years. And quite frankly, if you've been in the business for any time, it's gotten worse every year. And we do know of people that have had to wait sometimes up to 6 months to get reimbursed. To me, this is all about working capital. And this year, the Community Transportation Association, through CDTLS, is going to make available something we call the Working Capital Fund, which will allow you to borrow funding for these needs at reasonable rates, up to about 4%, and allow you to have the cash you need to pay those bills until you get reimbursed. Unfortunately, we have to operate more and more like real businesses. And the cost of these dollars that we're going to make available is going to be small enough that it will make life simpler for people and also allow them to grow. Because it's our anticipation that down the road, as we deal more and more with insurance companies and other intermediaries, we're going to have to prove that we can operate for 30, 60, or 90 days between when we get reimbursed. This is our solution. And that too is available at our website at www.ctaa.org. We're here to try to help you finance through those rough spots at a very low cost. That's, I think, what we can do. Thanks.
And Dale, I have one last question. What are you seeing in terms of the long-term impacts of MAP 21, in terms of the financial impact it'll have on transit providers?
Well, I think that all of us really need to be concerned about some of the financial aspects of MAP 21, specifically that we want to remember that MAP 21 is not large enough to fit our growing needs for financing. And one of the things that I've talked about here about trying to use the private sector as a source for investment to make some of our programs more affordable, we're going to have to always look for new and innovative ways to raise money to meet our financial obligations. We're going to have to think about using borrowing, as I mentioned in the two examples we used, perhaps even financing some equipment at 100%, trying to reorient the way we look at our fare box revenue and other ways and sponsorships, because there's simply not going to be enough growth in the foreseeable future. In some respects, this industry is unique. We have growing demand and growing need, yet our resources are not going to be growing as we need to have them grow to meet that need. It's incumbent on all of the people who are in the provider seat to come up with new and innovative ways to do it. We have a good history of that. And I'm convinced as long as we keep thinking that the federal funds that we get are part of the solution and not the entire solution, we're going to make progress regardless of how much more we can get at the federal level, because our people have always been excellent resources in raising the kind of money we need to advance the financial needs of community and public transit, any kind of community that we serve in. So that's how I think it tells us. It tells us we're going to have to work harder, and we're going to have to keep searching for new ways to do it.